Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. My article over the weekend was captioned, "The markets are run by machines, computers, algorithms and bots." Once upon a time, many years ago, the markets were traded on the phone and a human had to speak to another human in order to trade. You read the paper on the way to work, the TV was always on. You relied on a trusted network of humans in different parts of the world. That time feels as long ago as a fairy tale. I recall in the 1990s when the internet arrived on the trading floor. Today, as The Economist headlined October 5th, it is the march of the machines. The stock market is now run by computers, algorithms and passive managers. Morningstar reported that for the first time, the pot of passive equity assets it measures was at $4.3 trillion and exceeded that pot run by humans. The financial markets are a bot world with bots trading with each other. And there is clearly a convergence with computational propaganda. The University of Oxford's Oxford Institute Computational Propaganda Research Project produced a research piece which spoke of the use of algorithms, automation, and big data to shape public life is becoming a pervasive and ubiquitous part of everyday life. Cambridge Analytica's now infamous Andrew Nix said, "We just put information into the bloodstream to the internet and then watch it grow, give it a little push every now and again over time to watch it take shape. And so this stuff infiltrates the online community and expands with no branding, so it's unattributable, untraceable. So the candidate is the puppet?" the undercover reporter asked. "Always," replied Mr. Nix. Practically every trading day now and for over a year, President Trump recycles the same headline. The latest iteration, Donald Trump says China trade talks moving very nicely, claiming Beijing wants deal more than the US. Recycle the same headline over and over and over again, and each time markets jump, and each time it means nothing, tweeted Northman Trader. You know why algos buy unsubstantiated headlines? Because they are stupid, Northman Trader. This feedback loop has lifted stock markets, particularly in the United States, to all-time highs, and there's been a spillover into other developed markets. The human institutional memory has been eroded, and if you traded on the basis of fundamentals, you would have been stopped out a decade ago. This is a house of cards of simply monstrous proportions, and has been bulked up with the steroids of free money, negative interest rates, and QE. And that took me to the hollow men, T.S. Eliot. Here we go round the prickly pear, the prickly pear, prickly pear. Here we go round the prickly pear at 5 o'clock in the morning. This is the way the world ends, this is the way the world ends, this is the way the world ends, not with a bang, but a whimper. Interestingly, last week we saw a reversal of the overwhelming safe haven demand we'd witnessed all year. Gold had its worst week in 2 years. G7 government bonds sold off. The US 10-year printed its highest yield since mid-September, trading above 1.9%. The German 10-year yield was at its highest since mid-July, and French 10-year yields crossed into positive territory. The global markets pirouette on the outcome of the trade war. South China Morning Post News carried an article. Trade negotiator who got China into WTO is rooting for Trump's re-election because Twitterer-in-chief is easy to read. Donald Trump, whose trade war with China has upended global supply chains and imperiled the world's economic growth, would be most welcomed with another 4 years in the White House because he is easier to read than other American politicians, said the negotiator who led China's entry into the World Trade Organization. The US President's daily Twitter posts broadcast his every impulse, delight and peeve to 67 million followers around the world, making him easy to read. And the best choice in an opponent for negotiations, said Long Yong-tu, the former Vice Minister of Foreign Trade and point man during China's 15-year talks to join the WTO nearly 2 decades ago. Now it's clear that Trump is playing a game and he's played it rather well. And it is also within Xi's power to absolutely crash the US market by simply pronouncing that no trade deal is possible and the US stock indices will sink as far as the US farm economy has sunk, and with it Trump's re-election chances. And my final point is that whilst the Twitterer-in-chief is easy to read, I am not sure he is the decider. The risk of bot and algorithmic mayhem is sky high, and I'm not sure pumping the patient with more QE and free money will do the trick next time around. The bots will be waiting for Santa Claus and a Christmas rally, so as President Trump is wont to tweet, stock market up big today, a new record, enjoy. So as I was referencing that article in the South China Morning Post, that link is on Rich Wrap-Up's trade negotiator got China into WTO for Trump's re-election because Twitterer-in-chief is easy to read, best choice in an opponent for negotiations. He said Trump talks about material interests, not politics. Such an opponent is the best choice for negotiations, he said. Balding's World tweeted, "This is the new line that Beijing really wants Trump to win, but even the people sent to spew this nonsense can't pull it off." And then again, Ray CCP on Trump. When CCP say this, they've already misread America. True that Trump's tweets tells a lot about what's in Mr. Trump, but what China miss is that unlike authoritarian rule under which one man can decide everything, Trump can't negotiate with China at will. And I wrote about this on the 27th of May when I said the China-US war was going ballistic. And I said the point being in the trade war, Trump is no longer the decider. In the US, there is clearly a consensus baseline for a full-on toe-to-toe slugfest, as it were. And notwithstanding all the hyperbole and the very partisan commentary, the following are the plain truths. So, in my opinion, Xi is the decider, but Trump isn't. The markets, I said at that time, are still pricing in a benign, but much less benign than a month ago outcome. That was in May. We need to consider what a non-benign or even maximum non-benign outcome looks like. But, interestingly, when you think of the art of the deal, Xi, who is the decider in China, does have the capacity to crash the US stock market, and with it POTUS's re-election chances. And that is a signal that we have to hear through the noise.